Okay, so we're going to start off with T accounts, preparation of T accounts and balancing them. So I have a question lined up. It is a question from your textbook. It says, started in business with 15,000 in the bank. So whenever you're starting off business, whenever this statement comes in, you need to understand that this is an indication of capital. So you have two accounts to prepare, a bank account and a capital account. So you make one bank account, the other capital account. Now, because you started business, it is the personal funds that have gone down, but the business funds have gone up. So bank balance goes up. This is a business bank account. So 15,000. On the debit side, you write down November 1st, and the cross reference has to be capital. So if I ask you ये पैसे कहाँ से आए, तो तुम बोलोगे it is an investment in by the owner, right? Now, because accounting is all double entry system, so for a debit there has to be a credit. बैंक में debit हो गया, तो capital में you'll credit 15,000, and on what date, sir? On the 1st of November, and investment is through bank. These are these are what you call cross references. Second is bought goods. Goods का अपना कोई टी अकाउंट नहीं होता. Goods does not have a T account. The changes in um, the value or quantity of goods is recorded in four T accounts: purchases, sales, purchase returns, and sales returns. Right. So you're buying goods, it will always be purchases, and purchases are always debited. Right. So purchases, write down purchases, and who are you buying these goods from? Let's see. Uh, you bought these goods from J Small, F Brown, R Charles, and T Ray. So you'll have to prepare T account for J Small, F Brown, R Charles, and T Ray. So uh, J Small 290. I'll have to prepare a T account for J Small, and then I have to prepare an account for F Brown, and then I have to prepare an account for R Charles and T Ray. R Charles and T Ray. Okay, purchases are always debited. You should understand purchases are always debited because there are trading. These are trading expenses. 290 from J Small, 1200, 530, and 610. So 290 from J Small. Then you have 1200 from F Brown. Then you have R Charles 530, T Ray 610. R Charles 530, T Ray 610. These are entries into your purchases account, and these are on what date? These are on the 3rd of November. We write on November 3. You don't have to write down the month and the day again if these transactions are on the same day. Now, purchases are debited, then J small has to be credited because J small is a liability for us, and liabilities are always credited when they increase. So November 3rd, why do I have to pay J small? I'll write down because sir, you've purchased goods from J small on the 3rd of November. And then F Brown 1200. So I'll credit 1200. And why do I have to pay F Brown? Because I purchased goods. And on what date, sir? It's on the 3rd of November. Then R Charles 530. I'll have to credit R Charles by 530, and I'll have to debit um, the purchase account that is already done. So R Charles is a liability on me. And then T Ray is 610. So I'll have to write down T Ray 610 credit side. And then why am I crediting him? Because I've goods purchased goods on credit. So this a person is a liability on me. It's on the 3rd of November that this transaction took place. Next is cash sales. Cash sales means when you sell goods and you receive cash immediately. So you'll have to prepare two more T accounts, a cash T account and a sales T account. So I'll prepare a cash T account and I'll prepare a sales T account. So I'll go to that side. This is sales. And sales are always created. Why? Because sales are incomes, right? Sales are always and always created. So cash sales means you've received cash 610 immediately. So I'll in the cash account, I'll write down 610, and I'll write on the cross reference as sales. I'll write on the date. The date is the 5th, November 5th. It's here. And then in the sales account, I'll have to credit the sales account, and sales account is credited by 610. Why? Because goods were sold for cash on the 5th of November. Understood? Next transaction is paid rent. So paid rent by check. So you have a rent account to be prepared and you have a bank account to be prepared. The bank account is already prepared, as you see. So you don't have to prepare the T account again. This is the cash outflow. Bank balance would go down. I'll write down 175 on the credit side. And if I am the owner and you're the accountant and I ask you, where did this 175 go? You'll say, sir, you can look at the cross reference, which says rent. Rent is paid on the 6th of November. So you'll have to prepare a T account for rent as well. एक तो credit हो गया. For every debit there has to be a credit. For every credit there has to be a debit. So I'll go to a new T account. I'll give a title account. Give the account title as rent. And because rent is an expense, it should always be debited. 175. It is on the 6th of November. How have you paid rent, sir? The cross reference is bank. This means you've paid by check. Okay. Next is paid business rate. That's again by check. So there's a cash outflow from your bank account. So on the credit side, you write on 130 and you write down business rates. Business rates are operating expenses. And on what date? So it's the 7th of November, right? Then you have to prepare a T account for business rates. Because it's an expense, it will always be debited. The amount is 130. And if I ask you, how have you paid for business rates? So you'll say, sir, you can look at the cross reference which says you've paid by check. That is a banking transaction, right? Next is sold goods. So you already have the sales account. Sales are always credited. So you've sold goods on time. Time is a word that is not used anymore. Sold goods on credit, मतलब उधार पे sell किया आपने to Teapots, J Field and T Gray. These are three T accounts that you have to prepare. First, we prepare these T accounts, then come back to the transactions. So Teapots and J Field, Teapots, then you have J Field, and we'll have to look at the third T account, which is T Gray. Now I'll enter these transactions separately for you. Let's start off with Teapots. It's $85 sales to Teapots. So sales are always credited. Teapots, the amount is $85. You'll go to Teapot's account. You will debit him. Why? Because this is an amount that your customer owes you. You've delivered goods to him worth $85, but इनसे पैसे अभी नहीं लिए हैं. You write down sales, and the date has to be November 11th. So it's on the 11th of November that these transactions took place. In the sales account, write down 11. This was Teapots. Then we talk about J Field, that's $48. J Field is $48. J Field is $48. This is on the November on the 11th of November. You don't have to write down the day again even, okay? And J Field is debited by $48. And why? Because of sales on the 11th of November. So J Field owes the business $48. Teapot owes $85. And then we talk about T Gray, which who owes us 1640. So 1640, sales are always credited. It's T Gray. T Gray, you have a T account for T Gray. It's 1640. It's because of sales and it is on the 11th of November. Next is paid wages by cash. So you've paid wages, that's a cash outflow. Your cash balance would go down. Do you have a T account for cash? Let's see, sir. Um, yes, you have a T account for cash. The entry will be on the credit side. The cross reference would be wages and it would be on the, let's check the date. It's on the 17th and the amount is 290. November 17th, wages paid 290. You'll have to prepare a T account for wages. So we'll prepare a T account for wages here. Wages is an expense. It will always be debited. Cash is credited. Wages debited by 290. This is through you've paid through cash and the date. Let's check out the date again. It's the 17th of November. So November 17th. Okay. Please take care of how you place the dates. Okay. That is very important. Next is return goods too. So we've purchased goods. If you look closely on the 3rd of November, you've purchased goods from J Small, right? So if you're purchasing goods from J Small, there could be a reason why you could be returning the goods to back to them because probably they were damaged or they were not according to the order that you placed. So now you're returning goods to J Small worth $18. So because you've purchased it and now you're returning it, it has to be purchase returns. Purchases are always debited, so purchase returns will always and always be credited. Purchase returns is because purchase returns is contra to purchase. It reduces purchases. The amount is $18. The person you're returning it to is J small, and the date is the 18th of November. Go to purchase returns right on November 18th. Next is then your return goes to R Charles as well. That's 27. So credit side R Charles 27 on the same date. Now you have to adjust the T account for J small and R Charles as well. So I will go to J small. The T account for J small is here. You had to pay him $290, but you've returned goods worth $18. The cross references purchase returns, and the date would be November 18th. Okay. Now you'll have to go to another T account. Let's see. दूसरा बंदा जो है, it's R Charles. So you'll have to go to R Charles. You have a T account for R Charles already made 530. You've returned goods to him worth $27. So on the debit side, you write down 27. Why are you debiting it? Because your liability has gone down. You don't owe him 530 now because you've returned goods worth $27. That's going to be purchase returns, and this would be on the 18th of November. Understood? So you owe him less, your liability goes down, it is always debited, right? Next is bought goods again from R. Charles, 110, T. Ray, and F. Jack. So I'm going to debit my purchases account. Let's go to the purchases account and debit R. Charles, T. Ray, and F. Jack. R. Charles, T. Ray, and F. Jack. And the amounts are 110, 320, and 165. 110 for R. Charles, 320 for T. Ray, and 165 for F. Jack, right? And these are on what dates, sir? These are on the 19th of November. So you write down 19th of November here, November 19th. You don't have to write down the month if you don't want to. It's okay. Then you have a T account already prepared for R. Charles. So R Charles is here. You want to go on the credit side because you've bought goods again. This is on the 19th of November, and you'll say that you've bought goods worth $110 again from R Charles. You have a T account for T Ray already made. T Ray, we have to pay him 610 previously because we bought goods again from him on the 19th of November. We owe him more. Liability goes up, is always credited. Now, we don't have a T account for F Jack, so you'll have to make one for F Jack. So we make one for F Jack, and we owe F Jack $165, and this is on the 19th of November, I guess. And why do you owe him? Because you've purchased goods from him on credit. Understood? Next is goods were returned to us. Now, when you sell goods and they come back, we call them sales returns. These were goods sold previously and now returned back to us. So you'll have to prepare a T account for sales returns and a T account, and you'll have to check who did you receive these goods from. Um, we received them from J Field and Teapots. So we'll have to prepare a T account for uh, sales returns. So I'll have to go to the other page, write down sales returns, and sales returns are always debited because sales returns are contra to sales because they reduce sales. Um, Now, if we talk about sales returns, the amount of goods that were returned to us, J Field $6 and Teapots $14. So this is J Field on the debit side $6 and Teapots on the debit side $14. And this was on what date? The date is the 20th of November. 20th of November, right? November 20th, right? You don't have to write down the date again and again. Now, do you have a T account prepared for J Field and Teapots already? Yes, I guess. So we'll go to the T account for J Field. Let's see. R. Charles T. Ray Capital J Field. Yes. You have a T account already prepared for J Field. You'll go on the credit side because goods will return to us. They don't owe us for the goods that they've returned. The amount would be $6, and for teapots it's $14. Okay. So J Field is $6 and teapot is $14 in goods returned to us on the 20th of November. Okay. Next, let's move on to the next transaction. It says bought van on time from Turnkey Motors. So you don't have a T account for van. You don't have a T account for Turnkey Motors. Now, there are three forms of settlement. जब आप van खरीदोगे, either you pay by cash or through check or or on credit, right? So in this case, you're not paying immediately. You have to pay Turnkey Motors. Turnkey Motors becomes a liability on us, and if Turnkey Motors is a liability, this means that it has to be on the credit side, right? Now, let's go to the next page and prepare a T account for Turnkey Motors and van. So I have a T account for van. Van is an asset. When you buy an asset, it would be debited. It is on the 21st of November. Um, Turnkey Motors, because he becomes a liability. Van is debited. The amount of the van is 4950. So you'll have to prepare a T account for Turnkey Motors again because you've not paid him immediately. It's a liability on you. That's 4950 on the credit side. And then you have why do we have to pay him? Because you bought a van on the 21st of November. Now, next is paid the following by check. So I'm not going back to the question because I have the question in my hand. आप लोग भी picture लेके question साथ रख सकते हो. It says paid the following by check. J Small, F Brown, and T Ray. So these accounts are already prepared. These accounts are already prepared. So you're going to go to your bank account because you're paying them. Um, there has to be a reduction in your bank balance. So on the credit side of your bank, you're going to write down J Small, $272. And then you have F Brown, that is $1,200. And for T Ray, it is $500. Now, this was on the 23rd of November, right? Now, I'm going to go to J Small, the account for J Small. How much have I paid to J Small? The amount of money paid to J Small is 272. This is through bank, through check, and this was on the 23rd. Then you have to go to F Brown's account. That's a payment. Liability goes down, debited on the 23rd of November. And then you go on to the T account for T Ray. And T Ray, you've paid $500 to T Ray on the 23rd of November. So 500 payment through bank on the 23rd of November. Then we go on to 25th. It says bought another van. So you bought another van. You go to the T account for van. You debit the van account. Why? Because van is an asset. An asset when increased or when bought is debited. And paying by check immediately, $6,200. The value for van increases. It's $6,200 on the debit side. The amount is 6,200 and it is on the 25th of November. So I'm going to go to the bank account immediately and credit the bank account. Why? Because you've paid for the van immediately, 6,200. And if I ask you where did this money go, you'll say, sir, you've bought a van on the 25th of November, right? Then we talk about the next transaction, received a loan. So when you're receiving a loan, this means there is cash inflow into the business. It says received a loan of $750 from B Bennett, right? So we are on this transaction, received a loan. $750 cash from B Bennett. So cash balance has gone up definitely. So I'm going to go to my cash account and I'm going to write down $750. This is received on the 26th of November. And who did you receive this from? You received it from B. Bennett. Because B. Bennett has extended a loan to you, he has a liability on you. So you'll have to prepare a T account for B. Bennett. You can call it loan from B. Bennett, or you can call it B. Bennett if you want to. So this is B. Bennett because you owe him. It's a liability. This person's a liability. It's on the credit side, 750. And how did you receive the loan, sir? I received it in cash. And on what date, sir? I received it on the 26th of November. Next is receive checks. Again, so you're receiving checks, that's inflow into your bank account. So my bank account balance goes up. I'm receiving checks from Teapots and J Field. Teapots is $71 on the 28th of November, and J Field is $42 on the 28th November. So I'm going to go to Teapots account now. Teapots is here. The amount for the amount of money received from Teapots because you've sold goods to him is $71. So amount of money received, bank debit, Teapots credit in the bank from sorry, received in the bank through check, and this is on the 28th of November. You've received a check from Teapots and you've received a check from J Fields as well. That's $42 in the bank account on the 28th of November, right? Once that is done, sorry, yes, $42. And then that's it. Last transaction says proprietor. Proprietor is the owner. If proprietor brings in a further, proprietor is the owner. He brings a further $900 into the business. This means your bank balance goes up by $900, and this is on the 30th of November. And because it's the proprietor who's bringing in money, that's an increase in his capital. Capital is what you call investment. So in the capital account, I'm going to write down 900, and on the 30th of November, and the amount would be deposited into the bank account. So this marks the end of the question. You've prepared the T accounts. Now we move on to the balancing of all the T accounts. So I'll tell you which accounts to balance, and I'll tell you how to balance them. Please make sure you understand all of them. So we're focusing on bank. I have my calculator. You should also have your calculators with you. I guess the debit side is heavy because you have $15,000 here and you don't have any other amount bigger than 15,000. So debit side. So you leave one line after the last transaction. You make these lines. These represent totals of the heavier side. So I guess the debit side is 15,000 plus 71 plus 42 plus 900. And that makes it 16013. 16013 goes on both sides because the total of the heavier side goes on both sides. Now you start taking away these values, please. 175 from the total. So 16013 minus 175 minus 130 minus 272 minus 1200 minus 500 minus 6200, that makes it 7536. Please always recheck when you have a bigger T account, when you have a greater volume of transactions, please recheck again. ट्रांजैक्शंस का प्लस माइनस एक दफ़ा दोबारा रीचेक करेंगे, ठीक है? -500 -6200, then makes it 7536. This is 7536, and this is the difference of the two sides, difference of the debit side and the credit side. You're going to call this the balance carried down. Now you have to classify if bank is an asset, liability, or capital. If it is an asset, if it is a liability, or if it is capital, their balances are to be carried down to the next month. That's balance brought down. The next month you have is December 1st of December. The balance brought down is 7536. This means you have $7536 in your bank account. Then you move on to the capital account. The debit side is zero. The balance in the debit side is zero. This is what you call the debit side. This is what you call the credit side. Leave a line, total them up. 15,000 plus 900 makes it 15,900. 15,900 on both sides. Once you've done the totals, the lighter side has to be entered with the balance. You call that balance the balance carried down. The balance carried down is always at the end of the month, last day of the month. The amount is the difference between the two sides because you had a zero on the debit side. The balance carried down will be a 15,900. And the next first day of the next month is December 1st. Balance brought down. The amount is 15,900. So this account has to be balanced because it's capital account. It's capital account. So asset, liability, and capital के balances are carried forward. Now we talk about purchases. It is not this is not an asset. This is not a liability. It's not a part of capital. So this T account will not be balanced. However, the total of this T account will be posted to the trial balance. सिर्फ total post करना है. However, इसको total जरूर करेंगे, but we'll post the amount to the uh, income statement. So 290 plus 1300, sorry, 290 plus 1200 plus 530 plus 610 plus 110 plus 320 plus 165. That's 3225. 3225. This is 3225. This is balance carried down. This is on the last day of the month. 3225. 3225. Now, I've told you कि इसके balances carry forward नहीं होते. So what I've done is you're most prone to make this mistake. Please don't write down balance carry down. या आप लिखोगे क्योंकि आप ये करते आ रहे हो. So please don't. ये balance carry down नहीं होता because it's an expense का account. So instead of writing down all of this, I would want you to write down income statement because these totals are posted to the income statement, right? So income statement 3225, and that's it. No balances are brought forward because purchases for the last year are closed into the income statement for the last year, so you don't have to carry down the balance for purchases from the previous year into the next year or into the next month. Understood? So balances of expenses and incomes are not carried forward. Then we have J small. Let's talk about J small. J small uh, is a liability on you because you've purchased goods worth 290. Do we have a balance on T account for J small? I don't think so. You leave a line, you total both the sides. देखो credit side is also 290, the debit side is also 290. So yes, this should have been balanced, but it is already settled. The account is settled. So you had purchased goods worth 290. Now you've he returned goods to us worth sorry, we bought goods from him for 290. We returned goods worth $18, and the balance was already paid from the bank. So there are no balances to be carried forward into the trial balance for J Small. However, let's look into F Brown. This account is also settled, right? Because 1200 and 1200, there's no difference on either side. This is settled, so this does not go into the trial balance. Now, let's talk about this account. So this account has a total of $640, which is the heavier side. The heavier side is the credit side. You write down the total of the heavier side on both sides, then 640 minus 27 is going to give you 630. So our charge is owed by the business on the 30th of November, an amount of $613. So this is balance carried down. The first day of the next month is December 1st. Balance brought down is 613. This means you owe our charge $613, right? Then we talk about T-Ray. इसका भी total करते हैं sir. Which side is the heavier side? By looking at it, I think the credit side is heavier. This is 930 and 930. The difference is balance carried down. Balance carried down. It's on the 30th of November. The amount is the difference between the two sides. Sorry, that's going to be 430. 930 minus 500, and this has to be carried down to the first day, the next month. That's balance brought down, and the amount is 430. Now, cash, yes, it has to be balanced. Its total will always be the heavier side, will always be the debit side will always be the heavier side. It's 610 plus 750 makes it 1360. You write down the total of the heavier side on both sides, and then you take away 290. The balance that remains is 1070. This is the balance of cash you have in your hand at the end of the month, that is 30th of November, and this has to be carried forward because it's an asset. An asset, liability, and capital accounts के balances are carried forward, right, through the next one. So balance brought down is 1070 on the debit side. Now we talk about the next T account. We have sales. Sales is an income. The balances do not carry forward. These are the balances are posted to the income statement. However, the totals for this should be transferred to the trial balance. अभी दिखाता हूँ मैं आपको. Now, you total the credit side 610 plus 85 plus 48 plus 1640. That makes it 2383. Please recheck 610 plus 85 plus 48 plus 1640. 2383 and 2383. and the difference is not carried forward. It is posted, it is transferred to the income statement. It's 2383. No balance CD, no balance brought down. It is transferred directly to the income statement on the last day of the month. Okay, for all this happens for all incomes and expenses. So no, this also, rent is an expense. This also should not be, the balance should not be carried forward. It should be posted to the income statement directly. So we write down 175 total and write down the posting to your income statement. This is on the 30th of November. Business rates is also an expense, so balances are not carried forward. 130, 130, 130, 130. The total is transferred to the income statement on the last day of the month. Then we move on to the next expense, not sorry, to the next T account. We talk about teapots. We've sold goods to him, and sorry, this was sales returns. So he owed us $85. So he returned goods worth $14, and then he paid us the balance of $71. So this account is already settled. So you don't have to carry down the balance in the trial balance. Then we talk about this account. We sold goods to J Field worth $48. The total is 48 on both sides. He returned goods to us worth $6. He paid the balance. So there, this account is already settled. So you don't have to post it to the trial balance. Next is T Gray. So you sold goods to T Gray worth 1640. You write on 1640 on both sides. The total has to be in the same line. However, he still owes us, right? The balance carried down at the end of the month. We will receive this amount maybe next um, month, but we have to carry his balance in our books. It's 1640. The account is not settled. It's on the 1st of December. Wages is an expense. Balances are not carried forward. The balances are posted to the income statement. You write down 290 on both sides, and the amount should be transferred to the uh, income statement on the last day of the month. Purchase returns is also not to be, the balances are not to be carried forward. 18 plus 27 makes it, I guess, 45. 18 plus 20, $45. And the total of purchase returns also has to be posted to the income statement. Please make sure you remember this, okay? This is 45, the total is 45. This is on the 30th of November. No balances do not carry forward because it is a contra to an expense, contra to purchases, right? Then F Jack, you've bought goods from F Jack worth $165, 165 and 165. The balance carried down is 165 because we still owe him. At the end of the month, we got to know कि F Jack को हमने payment नहीं की है. You still owe him $165. The balance brought down on the first day of the next month is $165 on the credit side because it's a liability on you. Then we move on to the next page. We have a T account for sales returns. The balances are not carried forward. They're posted directly to the income statement. This is $20. The totals have to be in the same line. This is income statement. This is $20. This is on the last day of the month. The balances are not to be carried forward or brought forward. Van, however, is an asset. An asset will always have a debit balance. So you write down 4950 plus 6200. You have Van's worth 11150, $11,150. You post the totals on both sides because this side has a zero balance. The balance carried down would be 11150. This is on the 30th of November. You will have to bring down the balance because it's an asset. Asset, liability, or capital के balances carry forward, brought forward होते हैं. So that's balance brought down from the previous month, which is 11150. Then you have Turnkey Motors. You owe Turnkey Motors. Why? Because you bought a van from Turnkey Motors on credit. It's a liability on you, and liabilities के balances carry forward, brought forward होते हैं. Please make sure that you write on balance CD on the last day of the month. The amount is 4950. That is December 1st. The balance brought forward in the next month is 4950. This means you still owe Turnkey Motors 4950 in December. You took out a loan from B Parent. If you remember, that's a total of 750. That's also a liability on you. Liabilities, assets, and capital के accounts के balances carried forward, brought forward, carried down and brought down होते हैं. The amount is $750. It's on the last day of the month, November, carried down to the first day of the next month, the balance brought down is $750. Please make sure that the totals are in line. I have made a mistake. Please you avoid such mistakes. You will make such mistakes. You're bound to, right? Please just be very careful. Then we have the last, I guess that's about it. We've balanced all the T accounts. We'll start posting the balances to the trial balance. So let's we just cancel this out. This is what the trial balance looks like. You have a debit column and you have a credit column and you have a particulars column. You might as well also have a serial number का column. That is not important. वो 1 2 3 4 post करते हैं. Let's start posting the balances. There is no specific sequence. आप कोई भी T account को पहले डालना चाहते हो वो डाल दो. That doesn't matter. Let's start off with हमने जैसे बनाया हम वैसे बनाते हैं. It's totally on you, right? So I'm going to highlight whatever is to be posted. The first thing is balance brought down. So it is only the final balance brought down that has to be posted to your trial balance. Okay. So the amount is 7536. You write down 7536 in the trial balance. You write down bank because the balance brought down was, sorry, my bad, bank. The balance brought down was on the debit side. You write down 7536 on the debit side. Next T account I have is capital. So I'm going to highlight capital. The amount for capital is the balance brought down for capital is 15900. So on the in the trial balance, I'm going to go to the trial balance, write down capital, and on the credit side, I'm going to write down the total. The total is supposed to be 15,900 on the credit side. So capital 15,900 on the credit side, right? The next T account, let's go to the next T account. The next T account is purchases. The total is what? The total is 3225. The total is 3225. You need to understand purchases का balance carried down brought down नहीं हुआ, right? So you post the total, and purchases are always and always debited. The total has to be posted on the debit side 3225. Please make sure you don't mess this up. Purchases are always debited because it's an expense 3225 on the debit side. Understood? Next is we move on to the next account. We have J small that is already settled. So if it's already settled, you don't have to take it to the trial balance. Okay, so this is not to be taken to the trial balance. Okay, because it is already settled. F Brown is also already settled. कोई balance बचा हुआ नहीं है तो इसको हम carry forward अपने अपने trial balance में नहीं करते. However, for R Charles, you owe him $613. You go to your trial balance, write down R Charles $613 on the credit side. 613. Okay, next move on to another T account. We have T Ray. The balance is $430 on the credit side. You go to your trial balance, write down 430 on the credit side, and the name should be T Ray because you owe him $430. It's on the credit side. T Ray has to be on the credit side, right? Let's go on to the next T account. We have cash ka T account. The cash ka T account is the balance is on the debit side. It is 1070. This means you have 1070 in the bank account. So you write down in the cash account, sorry, 1030 on the debit side because it's an asset. Then the next T account is, just give me a minute. The next T account is sales, and the balance of sales is always credited. Sales are always credited because these are incomes. The balance has to be 2383 on the credit side, 2383 on the credit side because it's an income. The balances are not carried forward. However, incomes are always credited, and sales is 2383 on the credit side. Once you're done with sales, you move on to the next T account. The next T account is rent. The balance is not carried forward. However, you will have to post the total for rent, which is 175. 175 on the debit side, please. Okay. So you write down rent 175, and then you have business rates. That's also an expense. The total will be posted to the trial balance. On the debit side, the total is $130. Understood? I'll be sharing this file with you as well, so you can print it out maybe, or do a try and attempt it yourself. $130. Then let's talk about teapots. Do you have a balance for teapots? No, sir. Teapots ka balance is, the account is already settled, so you don't have to take it to the trial balance. J Field is also already settled. You don't have to take it to the trial balance. T Gray has a balance on the debit side. The final balance brought on is on the debit side, 1640 T Gray. So I'm going to go to my trial balance. I'm going to write down uh, T Gray. I'm going to write down 1640 on the debit side. Okay. Now the next T account you have is wages. Wages is an expense, always will always be debited. The total must be debited 290 into your trial balance. It's wages, sorry, it's wages $290, and then you move on to the next T account. The next T account is the next T account is purchase returns and FJAC. Let's do all of these together. Purchase returns, the balance should not be carried forward. This is closed into the income statement. The total, however, is posted on the credit side. It's $45, and FJAC is a total of $165 on the credit side. So purchase returns 45, FJAC 165. Purchase returns on the credit side, because it is contra to purchases. Purchases who come karti hai, right? Is $45, and FJAC was $165 because you owe FJAC. Let's go back to FJAC. एक दोबारा देख लेते हैं. Is a liability on us. Uh, it's we've purchased goods from him worth $165. So the first page is done. Let's move on to the second page. Sales returns, the total is $20, has to be posted to the trial balance on the debit side because it is contra to sales. Sales को कम करता है, sales बढ़ती है तो credit होती है. Sales returns will always be debited. The amount will always be on the debit side because it is a contra. The balances are not carried forward, they're posted directly to the income statement. Then you have van. The balance on the van account is 11150 because van is your asset. It has to have a debit balance. Van आ जाएगा 11150 on the debit balance. 11150. And then you have Turnkey Motors. You owe Turnkey Motors 4950 because you bought vans from Turnkey Motors. Is a liability. This business is a liability on us. We'll have to pay Turnkey Motors 4950 for van purchase from him on credit. B. Bennett, it was a loan from B. Bennett. The balance, a loan is a liability. The balance is on the credit side, $750 on the credit side. It says loan from B. Bennett. You can write down B. Bennett. That's 750. Let's check. अब हमारा कोई T account बाकी तो नहीं है. On this page we're done. The Now the first page, uh, we're done with all T accounts. Let's just total the columns for the trial balance and see if the trial balance agrees. Okay. For the agreement of trial balance, the debit side, the total for the debit side has to be equal to the total of the credit side. This should be your task when you attempt your question. Um, in your exam papers, please understand that the total of the debit side should be equal to the total of the credit side. However, the total is always there's a double line at the end of the trial balance already given to you. I'm going to start off with totaling the debit column first. So it's 7536 very carefully, plus 3225 plus 1030 plus 175 plus 130 plus 1640 plus 290 plus 20 plus 11150. Please do this two times at least. Do the total two times at least to check for accuracy. Uh, 15,900 plus 613 plus 430 plus 2383 plus 45 plus 165 plus 4950 plus 750. So what's the difference on it? Okay, so there was a difference of $40 that I was checking, and I picked up my mistake. The mistake was in the cash balance. If you look at the cash balance, we have written down the balance for cash is 1030, but the actual balance for cash was 1070, right? So please make sure you don't make these mistakes. It's a very minimal error. All of your accounting was correct, but you're bound to make such mistakes. So please make sure you don't make these mistakes. This is 1070. The total is 25236 on both sides. This means your trial balance is agreed. The total of the debit side is equal to the total of the credit side. This means that the value is correct. Your T account, double entry is correct. Thank you so much. Please practice a few more questions for your examinations. Goodbye.